Thank you, Jarida, for inviting me again to come and speak. It's a pleasure and an honor. And thank you, Ben Sirri, for this excellent organization. Sarah, this conference gets better and better every year, and I'm very proud and happy to be part of it. Last year we spoke about the sovereign wealth funds and investments in AI, where we're heading and why, and OpenAI was the biggest news. Everybody wanted to know what's happening with OpenAI and what's going on. And lots of things happened since then, so we're just going to go through it and explain what's happening. People want to know who is investing, why, what other companies are getting the allocation, what's the difference, OpenAI, Anthropic, XAI, what are these mega numbers we're hearing? People are talking about hundreds of billions and trillions, numbers we've never heard before. So I hope I get to cover most of this in this talk. How do we change slides here? Okay, next slide. So quickly, these are the objectives. Number one, I'm going to shed light on the global surge in AI allocation, what's going on and what's driving the investments. Number two, what exactly is the GCC sovereign wealth funds are doing and what's driving their decision to do this directly and indirectly through managers. And third is what everyone is talking about, is AI a bubble? Is it risky? And what's going on? In particular, this subject right here, circular deals, right? Everyone is investing in everyone's company and everyone wants to know what's going on. Next slide. So, next slide, please. So last year, we shared the exact same slide. This is the updated one. So I chose the 5 sovereign wealth funds that have exposure to AI. So others are not here, but these are the main 5 that invest in AI. And so together, they run about 3.7 trillion. Last year, in the same podium, it was 3.5. It grew to 3.7. And so that's a big number. Let's say it's almost 4 trillion. The whole China public equity, public market in Shanghai and Shenzhen combined is about 10 trillion. And it's 2 billion people. So we're talking about like 26 million people and 4 trillion of sovereign wealth fund. It's a very big number. That's why people come here. If you're wondering why does everyone come here, because of the amassed wealth of these sovereign wealth funds. And the major focus now is on AI, digital infrastructure, renewables, because that's where this is all heading. Second slide. Today we're seeing record investments and record AUM. So just like we saw with 3.7 trillion, the investments have increased exponentially as well. And if you see here, last year, it's 165 billion across 53 deals. So over the years, now we're at 165 billion of deals in terms of deal size, and most of them are, outside of MENA. And so mostly is in AI. And what we're seeing here, like e-commerce, in the 90s, AI payoff might take decades, but the sovereign wealth funds have all the time. Their investment horizon is 30 years. It's not like a family office, or they don't need to give dividends. They just need to invest strategically. And that's why I think they picked up on this, and they're doing it. Next, what's fueling the growth? So sovereign wealth funds are evolving from passive allocators, when they used to call us just passive capital. Today, we're strategically building the ecosystem. And the direct capital that's going into these companies is coming from the GCC sovereign wealth funds. So if you look at the top companies in terms of AI investments, it's OpenAI, XAI, Anthropic, Databricks, Perplexity. And if you look at here, it's about $1 trillion. So the $1 trillion in value, and the GCC sovereign wealth funds have been investing materially. And some of them, have developed other groups, which I will talk into in detail more, like MGX. Everyone wants to know what's going on with MGX. And it's Mubadala and G42 partnered to create this central node where everyone is investing. And KIA has direct and indirect relationships with MGX. Of course, the Saudis also have been working hard since last year. I was just in FII, and there's a lot of major announcements. If you know the company Humane, it's one of the largest AI companies now in the world, and they're financing many projects with very interesting companies like Replit and others. Besides Aqua Power and Al Fataim Group, they're all investing in renewables and big data centers in Saudi and large AI infrastructure projects. Starting with my favorite, next slide, please. KIA. I'm Kuwaiti, so it's always going to be my favorite sovereign wealth fund. And it's the best. So the Kuwait Investment Authority continues to prioritize AI. This is you guys can't read this, but the point of this slide here, this pie chart, is this slice here. It says artificial intelligence, machine learning is about 13%. So AI and machine learning forms one of the biggest chunks in KIA's active investments. That's 13% going here. So if you look at this, these investments are part of the KIA strategy to achieve sustainable long-term returns through investing in cutting-edge technologies. Last year at this podium, and I bet you remember that, we talked about it. Last year we did 150 billion, and someone said, wow, that's a big number. How are you going to invest in 150 billion? Well, it's worth 500 billion, last week. That's a 3x, and 3.3x actually a year on something as big as 150 billion. Now, OpenAI announced that they want to go public, H2 of 26, at $1 trillion, right? And which will give them 60 billion in liquidity. This is just one liquidity event of 60 billion. So the numbers are growing and people are paying attention. And also on top of that, KIA is also part of the AI infrastructure partnership with MGX and BlackRock. And so there's a lot of investments here. Of course, last year we mentioned the direct investments in OpenAI and XAI. The next interesting sovereign wealth fund, next slide, is the PIF. So Saudi had an awakening, and it's refocusing its capital away from large construction projects like NEOM and focusing more on AI and digital infrastructure. Today, as I said earlier, they're really focusing on mega deals. In FII, they announced a lot. But they've also have direct investments in OpenAI, Mistral, and Databricks. But if you look at the giga projects in Saudi, in 2025, NEOM, which is the gray, is not there. So they're putting all this money into AI. So also the PIF is doing it their way. Another very interesting sovereign wealth fund, next slide, is Qatar. Qatar, they've been quiet, but they all of a sudden have accumulated interesting ownership in these companies, whether it's Anthropic, Perplexity, XAI, and Applied Intuition. Now, if you look at the numbers, it's in companies are competition, let's say, to OpenAI, and they also have taken many bets. Some bets do great, some bets do horrible, like Builder AI. I know some people used to ask me about Builder AI a few years ago, and I said, stay away. I think the guy's a charlatan. And someone just lost 1.5 billion on that company. So there's a lot of charlatans, and you need to beware. It's a big people's game. Next is MGX. So MGX basically is, next slide, please. MGX is a coalition that was done by the UAE. The UAE is really spearheading AI investments. They have many initiatives, including G42 and Mubadala. So they came together and created MGX and invited a lot of people to invest with them along in MGX, including BlackRock, Microsoft, NVIDIA, and the Kuwait Investment Authority. And what they are doing in MGX is it's $100 billion. I think it's split between 30 billion in equity and 70 billion in debt, and they're just going over after AI data and energy infrastructure. And recently, like this month, or a couple of days ago, they announced a partnership for 40 billion acquisition of allied data centers, which also KIA participated in directly. And if you look at the investments of MGX, in October last year, they invested in OpenAI, then they invested in OpenAI again, and they invested in OpenAI again. And then again here, if you see in XAI, and in Databricks, and Databricks again. So their belief and conviction in AI continues to increase, and they continue to put their money where their thoughts are. And that's why MGX is a very strategic investment. And that's why in the beginning I said there's a lot of direct and indirect. So this is an example of the indirect exposure. When it accumulates, there's a serious percentages in these companies. You own 1 or 2% in OpenAI and XAI and Anthropic. That's material. I'm going to go now into just the company specifically, why they're great. So years since annual revenues is 10 million, from 10 billion, to 100 billion. It took OpenAI less than 3 years, and that makes it the fastest growing company in history. It's not a joke. So it's not an opinion or it's some idea. This is actual revenues. People are paying. Who doesn't have a ChatGPT app on his phone here? And it's reality. And so OpenAI is projecting 100 billion in revenue. Besides GPT, they have many products and many partnerships with the industry leaders. And OpenAI is definitely the largest company and the most successful in AI. Now, is it a bubble? I don't think it's a bubble. I think it's real because these companies are different than the VC companies that funded the e-commerce bubble when they were just little rookies backing rookies. These are the biggest companies in the world backing the biggest company in the world. And like from Microsoft, NVIDIA, and AMD, and Intel, and the US government to back Intel, and the biggest sovereign wealth funds, that's why OpenAI is what it is today. More on OpenAI. Today, if you look at it, it's also the most valuable company in the world. It's still private, and as we said, yes, its valuation is, it went from 86 in January to 150 last year when we were in this podium to 500, and as I said, it's going to go to $1 trillion in a year. And that's because the numbers back it up. I mean, if you have 100 billion in revenues, 10x is really not a large valuation. So this is why this company continues to be impressive. And if you had bought last year, you could have sold this year because there was a big secondary. You could have made over 3x just in 1 year. So OpenAI continues to be the most magnificent company in AI. The next slide. The other interesting company, which I really didn't think is going to matter, is XAI, which is Elon Musk's baby. Think about all the data that they have in Elon Musk, whether it's all the Tesla data that's collected from every car, everyone on Twitter, and all the other companies he's got that just collect data and put them into this one system of his. God knows what's going to happen with what kind of generative stuff and other AI models are going to come out, but it's really interesting what's happening in XAI. And the numbers are there as well. They have growth and revenues, and this year they have 13 billion, and 1 billion, and they're projecting 13 billion in revenues, and therefore the valuation now is 230 billion from just a third of that or a fourth of that last year. Next slide, Anthropic. So Anthropic, what's different between Anthropic and OpenAI is OpenAI is focusing more on retail, more on us, people like us having the app on their phone, doing generative AI work and research. Anthropic went straight for the corporate and the enterprise. And that's why Amazon is one of the largest investors, because they just converted all the AWS clients who sit behind AWS firewalls, and they want to protect their data. Now Anthropic comes in and does their AI analysis. So it's very synergistic. And so it's also realized extraordinary growth. If you see, OpenAI here, it's growing into the 9 billion in revenues, and that's also not an easy feat. Think about all the banks in Kuwait. Think about all the real estate companies in Kuwait. Think of them all together. 9 billion is a big number, and collectively, I think they might get there. But this is a company that did it in a few years. That's because they figured out where the demand is going to come from. And this is why it's called disruptive technology, because it comes out of nowhere and disrupts, centuries-old business models. And today, by December, is going to surge over 9 billion. That, next slide, that got reflected in its valuation. Today, it's almost at 183 billion. And if you look at it here, the top 10 AI startups over the past 12 months, OpenAI xAI, and Anthropic. And what we're seeing here is the growth between last year and this year, and the spread of the valuation. And that's really impressive because it's based on the clients I just said, and the fact that they're attracting all the enterprise clients. Therefore, you have the best capital: Iconic, Fidelity, GIC, QIA, and also BlackRock and MGX. Today, that's for Anthropic. Next slide. So between Anthropic, OpenAI, xAI, the data centers we talked about, MGX, AI has dominated the venture market. 63% of all the capital went to AI. So you can see where AI is really, just taking all the money. And the fact that sovereign wealth funds and institutional players are backing AI, it shows you the deep conviction that these very prudent investors are investing materially largest amounts of capital into this, and so is everybody else that's trying to get in. But this is the big game. Like today, someone asked me, should I put money in OpenAI? I mean, the company, personally, I don't think it's going to move the needle because you're going to write a small check and it's going to be in secondary, you're going to buy something, an SPV. It might not be easy. But for sovereign wealth funds and large institutional investors, it should have been a no-brainer years ago. Next slide. So AI continues to have strong momentum, and it shows, it shows in the valuations. Again, the top companies in the world as we speak today, SpaceX is not the biggest company. It's actually OpenAI. ByteDance with TikTok and all the noise is almost as valuable as Anthropic. And then, Reliance, Ambani and the billionaire in that wedding and whatever, is not even close to, to Databricks. And even companies like Stripe, which was the talk of town, now it's not even, it's nowhere near the AI companies. And the point here is that, AI is validated through all these acquisitions that are happening. And while many sectors face valuation pressures and doubt, AI and infrastructure assets continue to command premium valuations. Now, the only thing that worries me, next slide, is this circling of revenues between everybody, which I don't think anyone understands, not even them. Because every time I hear a podcast try to explain it, so I come here and explain to you what's going on, I don't know what's going on. All I know is that everyone is investing in everybody for some reason. So like here, some people put cash, some people revenue, some people sell chips, some people just do straight up equity investment and rentals. But the point is that they realize, this is the Wall Street quote, this is not from me. And so the Wall Street Journal just thinks that these interlinked mega deals resemble early signs of the dot-com era excesses and are drawing scrutiny from investors and analysts. But, these companies need, they're taking massive leverage as well. But unlike e-commerce, the revenues are there, they're real, they're life-changing, they're getting into education, they're getting into many parts of our day-to-day life, and it's immediate. And so, e-commerce was the biggest bubble in history, and it produced Amazon, the first trillion-dollar company. And who doesn't shop via Amazon today? And which companies don't use AWS, And so, you never know. I think some of the companies we're talking about in 10 years are going to be worth 100 trillion, and it's going to be a no-brainer. Lastly, this is also the next one here. This is very important. So in the tech bubble, right, in the peak tech bubble, 65% of companies were unprofitable. So like most of the market was unprofitable companies because people didn't care about profits. Today, however, right here, it's less than 20%. So this is not the tech bubble. These are profitable companies. These are companies with cash flow and EBITDA and free cash flow. So there is a realization of back to business. It's not just, hype. And as we're getting more and more into it, more and more companies are profitable. So like e-commerce, AI will take time to become embedded across all the industries. Revenue potential is massive. Monetization will eventually evolve and across everything. I don't know about advertising, enterprise, productivity. And so unlike the dot-com bubble, the AI wave is led by profitable giants. And it's really the big guns, not small-town disruptors. last slide. The conclusion, is it a boom or is it a bust? I think it's a boom, and I think the GCC investment is a structural shift. Instead of being passive investors, they're investing materially in technologies shaping the global economy for the next decade or decades. We have to continue to deploy patient capital into data centers and semiconductors and energy and renewables, and then and the big models, so that we're relevant and we're part of it. So there's the US, there's China, and there's the GCC. You know who's not in the game? Europe. And the AI boom will take time to materialize. Today's AI frenzy, is backed by the most powerful tech giants. It's not a small game like e-commerce. It's actually real, and everyone here is a user of e-commerce. And I think it's a boom, and I think it just needs patience. And I think everybody here should be looking at how to use AI to increase its productivity. And I think I have 1 more minute left. Next slide. Oh, thank you. So everyone asked me last year to touch upon our fund, and I couldn't talk about it last year for compliance reasons, but now that the fund is closed and fully deployed and fully announced, and I'm very thankful to be part of the Camco team that ran the fund. Today our fund is doing very well. And we started the fund in 2021. 22 is the close. So for a 3-year fund, we chose to invest in emerging managers, direct deals, and opportunity secondaries. We chose fintech, AI, enterprise tech, prop tech, and edutech. We were investing in AI as early as 2017. And what this means that we invested in companies, in funds in 2021 as the last investor, but the fund was from 2017 and 18. So this gives us a diversified portfolio. If you look at 2020, the year of COVID, we skipped it. So this gives us, and still some of our managers are investing. So look at our companies. For example, TalkDesk. We came in at 3 billion. The company is at 10 billion valuation today. Deal, we invested at 5 billion. It's at 17 billion as of last week. Again, Andreessen Horowitz. MaintainX, we did a few tranches here. We invested earlier, and then at 1 billion, and then we put more money recently, again, led by Bessemer, which is, I think, the best SaaS investor. And most importantly, Mercury, our favorite, we came in at 1.6 and 1.4, and Sequoia just marked them up at 3.5, which gives us, we're very happy to see that our average is above 3 in terms of our direct investments. In terms of our emerging managers, first of all, we have Jake Zeller with us today. Thank you, Jake, for coming. So here we have Jake here at 3.0 and Jake at PowerSet. Jake's fund is at 4x after a few years. He's one of our most best performing managers. This is his fund 1, I would say, from our portfolio at least. And then we followed on his second fund and third fund. This is his latest fund. It's not even a year old as far as we're concerned, but we're in Lovable. Lovable is the fastest growing AI company in terms of vibe coding. So this is how we find them. So in a few years, we'll probably want to invest materially in Lovable, and that's how this is our discovery and tracking program. We invest in emerging managers, find the best companies, and double and triple down on the winners. So this is where we found Mercury, and we ended up doing it, and MaintainX, and this is here where we discovered Lovable. And between them two and our relationships with our managers, we're happy. Also, Yuri Segalov, for example, he had a company called Wayfounder. General Catalyst just acquired his whole company. General Catalyst, if you know, it's one of the largest private equity and VC funds in the world. They just came and acquired him and made him managing director of Seed because they like what he's doing. And now he is, and of course KIA and all the big guys are investors in General Catalyst. So now the guy who's finding the seed was actually the guy funding it for us for the past couple of years. So we're very happy with this validation. And the organizers have prohibited any questions, thankfully. So thank you all for coming and for listening. Thank you.